Hey there, I'm Bobby, and welcome to the Net Gain Real Estate channel. If you're a homeowner and considering renovating your home, you're in the right place. Today, I'm going to help you understand the various options available for paying for those renovations or your rehab and even your new construction. Whether it's a small update or a major overhaul, knowing how to finance your project is crucial. A little bit about me. I've been involved in all facets of real estate, from financing to selling to rehabs, renovations, new builds. I love sharing tips and insights on how homeowners like yourself can get into the transformative home renovation space if you choose to do so, and how you can get the funds to afford to do that. In this video, we'll explore everything from using credit cards and cash to borrowing from retirement accounts and refinancing your home. We'll also dive into VA and FHA 203K renovation loans. Plus, I'll touch on other options like personal loans and even borrowing from family members. I'm excited to guide you through this journey with an informative, enthusiastic, and friendly approach. At least I'm hoping. So let's get started. Turn your renovation dreams into reality. To start with, before diving into the various financing options, it's essential to assess your renovation needs. Understanding the scope and cost of your project will help you make informed decisions about how to pay for it. Trust me, a little planning here goes a long way. First, determine exactly what you want to renovate or what remodels are you doing. Just updating the kitchen, adding a bathroom, or maybe doing a complete gut home makeover. Knowing the extent of your home renovation will allow you to create a detailed budget. Speaking of budgets, let's talk about creating one. List all potential costs, including materials, labor, and permits. Don't forget to add a buffer for unexpected expenses, because let's face it, surprises always pop up during renovations and remodels. A good rule of thumb is to add an extra 10 to 20% of your budget for these unforeseen costs. Creating a budget not only helps you understand how much money you'll need, but also guides you in choosing the most suitable financing option. So grab a pen or paper, better yet, an Excel spreadsheet, and start listing out those costs. This initial step will set you up for success and ensure that your renovation project runs smoothly from start to finish. We work with all our clients on creating a complete budget and factor in for those nasty surprises that seem to happen in life. If this is helpful, this is one of the key areas that we help our clients work through successfully to complete amazing home renovations and remodels while saving thousands of dollars in the process. If you'd like to learn more about how you can do that too, please check out the info with the link below. Now, on to the financing options. Now that we've gotten your renovation needs and created a budget, let's explore the various financing options available to you. Credit cards. Credit cards can be a convenient way to finance smaller projects. They offer quick access to funds and even potential rewards points. However, be cautious. Credit cards come with high interest rates if you don't pay off the balance quickly. This can make your renovation more expensive in the long run. If you're needing some quick cash or quick payments to get some appliances or some other materials along the way, this might work for you. Or to cover a draw for a contractor until the bank gives you your draw funds. Cash. Using personal savings is another option. The significant advantage here is that you won't incur any interest in debt. But keep in mind, this will deplete your savings, which could be needed for emergencies down the line. So you kind of have to weigh that and see which way works best for you. Retirement accounts. You can also consider borrowing from your 401k or IRA. This allows you access to large sums of money, but it comes with potential penalties and taxes. Plus, dipping into your retirement savings can impact your future financial security. Definitely speak with a retirement planner or an accountant before choosing this option. Refinancing your home. A couple of options here. A cash out refinance. Cash out refinance replaces your existing mortgage with a new one that's larger. This can potentially offer lower interest rates and provide for substantial amounts of money to be used on a remodel or renovation. However, you'll face closing costs and extend your mortgage term. Based on when you took out your current mortgage, this can be one of your best options. Maybe you have a substantial amount of equity in it And refinancing for an 80% loan or even 70% loan still provides you with the funds that you need to get this project done. Check with local lenders and see what, if any, programs that they have that would allow you renovations or rehabs of a primary residence property. Just an FYI, for investor properties, everything is different in terms of financing options, including interest rates, down payments, and fees, etc. Now, a home equity loan, HELOCs. HELOC is a second mortgage based on the equity in your home. You can usually borrow up to 85% of your home's value minus what you owe on the current mortgage. This option offers lower interest rates compared to credit cards and other sources of funds, and the interest may be tax deductible. According to our review of the IRS FAQs, there's a lot of alphabet soup on the topic of interest. The interest is deductible as long as the mortgage satisfies the same requirements for deductible interest as on a primary residence. There are somewhat different terms for homes that were acquired pre versus post 2017, but we'll leave that to you to speak to your accountant about. Final note, remember, failing to repay puts your home at risk. Now, a couple of government programs that you might want to look into if you haven't looked into them already. The FHA 203K loan program, been around a while. It's a great program if you do it right. It's excellent for purchasing and renovating a home, rolling both costs into one mortgage. It offers a low down payment, government-backed security, but it involves a lengthy approval process and specific eligibility requirements. I've done this a few times with this program, as have some of my clients. I found that the key to success with this is to work with a lender that knows the program inside and out and has done a lot of FHA loans. If you talk to a conventional lender who has not done these, you're in for probably a longer slog and potential failure. So I would definitely stick with people that specialize in this program. And when you follow that route, it's not painful. However, if you are working with someone that's not a pro, as I said, it can be painful, very painful. The VA renovation loan program. It's available to veterans and it provides competitive interest rates and requires no down payment. However, you must meet the eligibility criteria and a funding fee may apply. I've had a couple of clients use the VA program and it's excellent. Fees are lower and the interest rates are frequently lower than other options, including FHA in the private sector. It's great and a well-deserved benefits for our vets and families. Okay, then. By understanding the different financing options, you'll be better equipped to choose the one that best suits your needs and financial situation. Now, apart from traditional financing options, there are other ways to fund your home renovations that might be worth looking into and seeing if they're a fit for you. Personal loans. They can be a viable option for funding renovations. They offer fixed interest rates and a predictable monthly payment, making it easier to manage your budget. However, personal loans often come with higher interest rates compared to secured loans like HELOCs or mortgages. So weigh your pros and cons carefully here and run the numbers. Borrowing from family members. Sometimes borrowing from family members can be a practical solution. This can be done informally without formal loan documents, which might make it easier and quicker to get the funds that you need. However, it's essential to tread carefully here, really carefully. Money matters can strain relationships if not handled, correctly. Definitely, we recommend thinking long and hard before moving in this direction. And if you do choose this, keep it professional and above board. And I would recommend having an agreement in place so that everyone can feel more secure about what's been agreed to. Now, informal loans with family members can be flexible in interest rate, but the lack of formal terms can lead to misunderstandings or conflicts if repayment expectations aren't clear and could, in the end, damage your relationship. With a formal agreement, however, it cuts down on the potential conflicts and consider setting very clear terms when borrowing from the family members. Create a draft agreement that outlines loan amount, payment schedule, and interest that can help keep everyone on the same page and everybody in the family happy. By exploring these additional options, you can find a financing solution that aligns with your specific circumstances and ensures your renovation project runs smoothly. By understanding your options, you can choose the one that best fits and helps you achieve your dream home. Thanks for joining me today. If you have any questions or additional tips, please leave them in the comments below. I love hearing from you, and I'm here to help you navigate your home renovation journey. Don't forget to like, subscribe, and hit the notification bell so you don't miss any of our upcoming videos.